I do think that the gain percentage wise in silver is likely to exceed the gain in gold. I mean, that's typical. And silver started to make its catch up move even later. Silver, even a year ago, was only about $30, and then it quadrupled very quickly between late last year and early this year. Silver got all the way up to $120 an ounce. Now it pulled back to around 70, and as we're speaking, it's back above 80. Silver is a massive breakout. It took silver a lot longer to break out than gold, but now they've both broken out, and I think we have a bull market in precious metals. And it's not just silver and gold, it's platinum, palladium. All of these metals were lagging. Gold kind of was a one-man band when it comes to precious metals, or when it came to precious metals, up until last year. And last year, we finally saw the other precious metals follow gold's lead. And now it's just a general bull market. And in that bull market, you would expect the gold gains to outpace, the silver gains to outpace the gold gains.
Financial commentator Peter Schiff believes silver could significantly outperform gold during the current precious metals bull market. After remaining near $30 for years, silver experienced a massive breakout, surging toward $120 before correcting and stabilizing above $80. Schiff argues that silver historically delivers larger percentage gains than gold once momentum accelerates, especially during periods of inflation, currency debasement, and financial uncertainty. While gold initially led the rally, other precious metals, including silver, platinum, and palladium, have now joined the broader uptrend. Analysts increasingly view this synchronized breakout across the precious metals sector as confirmation of a major long-term bull market. As global debt rises and confidence in fiat currencies weakens, investors are turning toward hard assets for wealth preservation and protection against economic instability. Subscribe now for daily updates on precious metals, economic trends, and wealth-building opportunities. Stay ahead of the financial shift and never miss a market-moving alert.
I think gold is still relatively undervalued. Gold has gone up quite a bit in the last few years, although it's pulled back, pretty substantially since its peak in late February. But I think gold's move was just kind of catching up to where it should have been years ago. Given all of the money that the Fed has created and other central banks, I don't think gold kept pace with that amount of inflation. But, it's caught up, or maybe it has a little bit more to go. But we're going to create a lot more inflation. So the price of gold is going to have to continue to rise to reflect the debasement of fiat currencies, and in particular, the debasement of the U.S. dollar. I don't think it's going to stay flat. I think it's going to continue to rise. Maybe if the Fed were to aggressively hike rates and shrink its balance sheet, but that's not something that I expect to happen. I think the Fed is more likely to reduce rates and step up the pace of quantitative easing. So if anything, I would expect not only gold to keep going up, but the trajectory of the ascent to increase as well. I do think that the gain percentage wise in silver is likely to exceed the gain in gold. I mean, that's typical. And silver started to make its catch-up move even later. Silver, even a year ago, was only about $30, and then it quadrupled very quickly between late last year and early this year. Silver got all the way up to $120 an ounce. Now it pulled back to around 70, and as we're speaking, it's back above 80. Silver is a massive breakout. It took silver a lot longer to break out than gold, but now they've both broken out, and I think we have a bull market in precious metals. And it's not just silver and gold, it's platinum, palladium. All of these metals were lagging. Gold kind of was a one-man band when it comes to precious metals, or when it came to precious metals, up until last year. And last year, we finally saw the other precious metals follow gold's lead. And now it's just a general bull market. And in that bull market, you would expect the gold gains to outpace, the silver gains to outpace the gold gains. I think they've lagged even more than the metals themselves, because I think there's been a lot of skepticism in the investment community about the gold rally and the silver rally. And so investors have been reluctant to fully price in the move into the earnings estimates and therefore into the stock prices. So I think the best opportunity for big gains is in the miners. You're going to get big gains, I think, in the metals, but you'll get even bigger gains, I think, in the miners if the big gains in the metals actually pan out. So that's where most of my money is. I think that the big play is buying these mining companies, which I think are even more undervalued than the metal. And, we manage a lot of money at Euro Pacific Asset Management. We have strategies that focus on miners in addition to our other broader strategies on dividend paying and value stocks and emerging markets. And we manage a gold fund, too, that focuses all on gold and silver mining companies and also has a large allocation to the smaller ones, which is where even better opportunities are. There's great opportunities in the large cap gold miners, but they're even better when you go down the food chain to the smaller ones. So we have a good diversified portfolio of those in our gold fund. So people should check it out. The symbol is EPGIX. That's the no load symbol that you can get at any discount broker, or you can go to Europac.com and get information on my separately managed accounts and on that mutual fund.
Financial commentator Peter Schiff believes gold remains significantly undervalued despite its strong rally over recent years. Schiff argues that massive money creation by the Federal Reserve and global central banks has debased fiat currencies far faster than gold prices have reflected. While gold and silver recently experienced pullbacks after explosive rallies, analysts believe the broader precious metals bull market remains intact. Schiff expects silver to outperform gold in percentage gains, noting that silver's delayed breakout historically leads to stronger upside momentum. He also believes mining stocks may offer even greater opportunities than physical metals, as many investors remain skeptical of the current rally and have not fully priced higher metal prices into mining valuations. With expectations of lower interest rates, continued quantitative easing, and rising inflation, investors increasingly view gold, silver, and mining companies as critical long-term wealth preservation assets. Let's get back to the interview.
Well, I think the war is actually another positive for gold, just improves the fundamentals. But so far, the war has been a catalyst for a correction in gold. Gold peaked out just before the war started and sold off. And some of that was buy the rumor, sell the fact, because part of the reason for the big run up in the price of gold leading into the war was the anticipation of the war. It wasn't a secret that it looked like we may have a war with Iran based on the troop movements, based on, where the ships were and the rhetoric. So the markets kind of got ahead of the war. And by the time the war started, you had profit taking, which, is typical. Buy the rumor, sell the fact. That's not unique to gold. That kind of happens with most markets. But the sell-off in gold that followed the outbreak of the war got a lot of people to think, oh, well, maybe gold's not a safe haven. Look, it's gone down, because of the war. And I think they missed the forest for the trees because the big move happened right before the war. But gold did pull back, and I think it's consolidating and getting ready for another breakout, and I think it's going to run to new highs. I think it's going to be above 6,000 before the end of this calendar year. And it's, at 4,800, it's a good buying opportunity now. And, the war, one of the reasons the war is positive for gold is because wars are inflationary, not just because of the war itself, but because of the way we pay for them. We pay for wars by running big deficits, and then the Fed prints money to buy the bonds to keep interest rates from rising. And so it's inflation. So we're going to get more inflation because of the war, and that's good for gold. And the war is going to weaken the economy as well because it makes energy prices go up, food prices go up. And, that puts a damper on economic activity because when you spend more money for food and energy, you have less money to spend on discretionary items. And so you see a downturn in those areas of the economy and a pickup in layoffs. And so, that also leads to bigger budget deficits and more money printing and more inflation. All roads seem to lead to more inflation, which lead to gold. I don't think stock prices going down are going to have much of an impact on inflation. If stock prices fall far enough, that might, in and of itself, get the Fed to act with, bailouts and rate cuts and QE, which would have a positive, or not a positive, but an impact on inflation in making it go up. So it mainly depends on how the government reacts to a falling stock market as for its inflationary implications, not the stock market falling just, in and of itself. I think that's where investors should keep their liquidity. I think it's much better in gold because it's not being debased. I think that dollars are problematic to hold because the longer you hold them, the less they're going to buy. So you're losing money over time by holding on to dollars. And that's true for most fiat currencies, probably all of them. I think it's just particularly true right now for dollars because I expect a major dollar decline in relation to other foreign currencies. The war kind of slowed down. The dollar had a very weak 2025. And I think the dollar would already be much lower now had the war not started. So the war, gave the dollar a bit of a temporary reprieve, but it's not a stay of execution. Right? Or there's going to be an execution whether we stay it or not. Maybe is what I meant. So I think that when the dollar resumes its decline, that's going to be an even bigger impetus, right, for inflation and the rising price of gold and silver.
Financial commentator Peter Schiff believes geopolitical conflict and rising inflation are creating a powerful long-term bullish environment for gold and silver. Although gold experienced a temporary correction following the outbreak of war, Schiff argues the decline was largely a buy the rumor, sell the fact reaction after markets anticipated escalating tensions. Analysts believe wars historically fuel inflation through massive government spending, rising deficits, and central bank money printing used to finance debt. Schiff expects these inflationary pressures to push gold above $6,000 before year-end, while weakening confidence in the US dollar further supports precious metals. Rising energy and food prices, combined with slowing economic growth and potential Federal Reserve rate cuts or quantitative easing, are increasing investor demand for gold as a safe haven asset and long-term store of value during global financial uncertainty. Let us know your opinion on this analysis in the comments below. If you enjoyed this video and found it valuable, make sure to subscribe and enable notifications so you never miss our latest updates on gold, silver, crypto, and global markets. Thanks for watching The Wealth Mint. We'll see you in the next video.